Hello, everyone, and welcome to the Binance podcast. My name is Wei Zhou. I'm the Chief Financial Officer for Binance. So what I want to do with this show is to spend time talking to specialists, entrepreneurs, scholars, influencers, basically leading people from a variety of industries. Hopefully, through these conversations, we can share insights on how blockchain is changing not just these different industries, but also in changing the world. Here's a quick disclaimer. All opinions expressed by our host and our guests on this podcast are merely their own opinions. They do not imply any endorsements or opinions of their companies. You should not take these opinions as specific investment advice, as you will be solely responsible for your own investment.
Hey everyone, this is Wei. I am back here with another episode of the Binance podcast. Today, I'm really excited to have Samuel Bankman-Fried to join me. Sam, I've known for quite a bit of time. He's the founder behind Alameda, and he's also the founder behind FTX, which is the cryptocurrency exchange that Binance actually invested near the end of 2019. And then I myself actually worked on that deal, and then and have actually known Sam since he, I think, started trading on Binance with Alameda back in 2018, actually. So Sam, thank you for joining the Binance podcast.
Of course, thanks for having me.
You and I sort of first had a real in-depth discussion at the Binance conference in January last year. We talked a little bit about who you are. At that point, it was just Alameda. But in the span of 12 months, you have basically now one of the top derivative exchanges, but also as a whole, one of the top 5, top 10 sort of cryptocurrency exchanges in the world now, in FTX. So before we jump into sort of what you've done in terms of building two businesses, can you tell us a little bit about sort of your personal background? Anything you want to add in?
Yeah.
It's like where you come from, sort of how'd you get into trading in the first place?
Yeah, absolutely. So, I guess I went to MIT, majored in physics there, and I was sort of, trying to figure out what to do with my life. As I was going through college, wanted to figure out how I could have as much impact on the world as possible, and sort of settled on, figuring out basically how I could figure out how to donate as much as possible. And that led me to a job in finance. So I joined Jane Street Capital as a quantitative trader in New York, and I worked there for about 3 years trading international ETFs. And then in 2017, I left Jane Street and started up Alameda Research, which was a quantitative trading firm in crypto. Sort of grew that out over the next few years. As one of the largest players in crypto trading, we had sort of a firsthand look at how the exchanges operated, and especially in the derivatives space, felt like there's a lot that we could have to offer in terms of product design. And so I started building out FTX, launched spring of 2019, and have been sort of growing that ever since.
I'm really curious about what happened in 2017. That was just before, I think, Bitcoin and everything else started to booming, and just before sort of like alts.
Yeah.
How did you get into Bitcoin trading or owning in the first place?
Yeah. Basically after leaving Jane Street, I took a look at crypto, and there sort of seemed to be large arbitrages, but it's pretty unclear how real that was. It's just like numbers on a website somewhere that seems different from each other.
At that point, it was still a pretty dark and scary place.
It really was. And I mean, there's still a lot of work that needs to be done on the infrastructure, but it's even much worse then. Started digging into it, and it seemed like, there are a lot of issues here, a lot of operational issues in actually executing any of this, but that these trades were real, that there were in fact very good trades to do, large spreads between different exchanges, and sort of jumped into that. When I sort of started looking into it, Bitcoin was worth like $3,000. By the time we'd ramped up, it was worth 10,000. And those first few months were sort of, it was this weird thing where you think of quantitative trading as like, people doing extremely advanced math, their, lab coats or programming or whatever, and then saying like, aha, we found the trade. But this is sort of very much not like that. Like the trade was the easiest. The trade was you look at two exchanges and you're like, well, that number is bigger than that number. That's interesting. Like Bitcoin's trading for $11,000 in Japan and $10,000 in the United States. Mm-hmm. Those aren't the same. And so the trade is obvious. It's, buy the $10,000 Bitcoin and sell the $11,000 Bitcoin. But then you go to do it and you run into all these different roadblocks. everything from how to get banks hooked up to these exchanges to how to get withdrawal limits that are high enough to do these trades, understanding the blockchains correctly, and sort of a bunch of other operational, regulatory, corporate pieces of this. And then also sort of the technological part of this, actually getting API connections to the exchanges. And so, sort of late 2017, frantically scaling up as much as we could to be able to scale into these trades while they're still there.
How did you fund the startup? Was it just your own money, or did you actually raise outside capital?
So it's just my own money at the beginning. I had a little bit of money left over, as did a few other friends of mine. There's sort of, loans from friends and family financing, the very beginning of this.
So it's just a super bootstrap startup then?
Yeah, exactly. Everything was super bootstrapped. I mean, it was, we sort of did trade one on day one, and then each day we tried to kind of build another thing on top of it and kind of like rebuild our infrastructure and our corporate infrastructure and our financial infrastructure. But it was all just extremely bootstrapped, trying to start from as little as possible and scale up as quickly as possible.
Because by the time I met you in 2018, you guys were plugged into over 50 exchanges, I think, at that point.
Yeah, we did sort of a mad dash in 2018, especially of plugging into exchange after exchange after exchange. And at this point, there's sort of 10, 15 exchanges that really have the bulk of the volume, but it was a lot more disparate back then and a lot less clear. I mean, you guys were still pretty young then, and I think it wasn't clear from the outside that Binance was going to grow to be what it ended up being. And there have been a lot of sort of changes that have happened between now and then. And so we're just sort of frantically connecting to as many venues as possible.
Because what I was super impressed by at that point is basically the infrastructure that you've had. Because I think even for us to build up infrastructure is really hard. And like you said before, there's actually a lot of unknown unknowns in this industry at that point.
Yep, there absolutely are.
How are you able to scale that in just in a year and a half time?
Yeah. Sort of the basic answer is just a lot of sweat and blood. I mean, there's sort of a lot of tricks of the trade that we learned as we went on. But, a lot of it was just, we tried really hard. We kept trying. When one thing didn't work, we didn't give up. We sort of tried more and more routes, kind of trying to figure out anything we could to get to where we wanted to be. And so we opened up a bank account. It lasted about a month before it got shut down because we're using it for crypto, and JP Morgan Chase wasn't excited about that. And so then we sort of immediately moved on to bank account number 2 and bank account number 3. And pretty soon we're just canvassing all banks in the neighborhood, opening up account by account. We're spending 3 man-hours a day physically at banks because the wire transfers for the sizes we need, you couldn't do them through online portals. And it was just brutal. I mean, we were standing there, so typing in the reference numbers 3J, and we're like, you have 30 seconds to get this out before the deadline. Just type it. And the Q R. And we're like, no, that's an S. It's not an R. You got to fix it.
Okay.
And so, it's a ton of scrambling. Sort of that was on one end. We did the same thing on the exchanges end, where we tried everything we could to get connected to exchanges. Often, our first attempts didn't work. We had to figure out how to handle exchanges that didn't have APIs or had APIs that were missing key features. And, we built a lot of infrastructure around that and, around sort of semi-functional products and infrastructure. And, really the answer is just a ton of trial and error, thousands of hours of work, and trying to be as creative as we could.
I mean, obviously you were quite successful because by the time I met you, I think you guys were delivering monthly returns pretty much consistently for about 18 months straight. And some of the monthly returns were even in double digits, in 17 and 18.
Yeah, there are some pretty good trading opportunities if you sort of were able to scale up to it. And there were some really satisfying moments when we sort of plugged in the final piece of a system and were able to turn it on and, saw the trades come to life as we'd been envisioning them. And you ask how how a 5% arbitrage could exist. And the answer is, well, it's because it took 1,000 hours of work to be able to do it. And, not many people got to that point and got through all those barriers. And so it was sort of super satisfying to finally get there.
Thanks to sort of the second part of the question. You already have a successful quant fund, right? Obviously, you're delivering, consistent returns, and then you're raising capital and you're scaling pretty effectively. And then you already have a path to financial freedom. What makes you want to build and run and operate an exchange on top of that? Because an exchange is nightmare.
Oh, yeah. I mean, there's a ton of sources of consternation there that we definitely didn't have to deal with before. And I think customer support is a clear example of that. And I think I'll give sort of 2 types of answers. One type of answer is we thought we could do a good job of it. We felt like there's a lot of openings, a lot of opportunity to innovate on the existing systems, and that we sort of understood how to do that. And we understood a lot of ways that we would build things differently than they had been built. and that would sort of add a lot to the space. And so that's sort of one part of the answer, is just we felt like we could add a lot and do a good job. And another part is that, we sort of didn't get complacent. And a lot of where I think this is coming from is we didn't sort of feel like, we have a successful business, that's enough, no point in trying to do more than that. We sort of want to do as much as we could and grow as big as we could. And I think, some of that traces back also to like, why am I in this in the first place? It's sort of to be able to have as much impact as I can and sort of donate as much as I can. And sort of the sky's the limit on that. You have one successful business, you haven't maxed out the amount of impact you can have on the world. And there's sort of always more you can do. And so we're sort of always motivated to strive further.
Mm-hmm. And what were some of the differentiators then that you would say that FTX has to some of the, at that point, the incumbents in the market?
Yeah. So one thing is I think the margin system was a lot cleaner than a lot of the other venues. And to give sort of, there's a lot of pieces that, but some examples, first of all, clawbacks, like there's huge problems with clawbacks in 2018, hundreds of millions of dollars of them. We kind of rebuilt the risk engine from the ground up. We've never had a clawback. We sort of rethought margin, and in particular, we have cross margin between all of the contracts on FTX, and we have flexible margin where you can use a lot of different assets as collateral on FTX, as compared to a lot of venues where you're trading the ETC futures, you got to move the ETC into margin. Then you want to trade EOS futures, you got to go buy some spot EOS in order to trade the futures. Then you get close to liquidation on one, you can't move collateral between them because not only are they different accounts, they're even different collateral currencies, and it's just this massive production to manage. And we sort of cleaned all that up with normal linear contracts, stablecoin settled, with cross margin between all of them. We launched a lot of products we felt like were sort of obvious and pretty cool that no one had done. Mm-hmm. And the examples of that are index futures. So we have an altcoin index future if you want to take a position just on altcoins in general without taking one on one specific token.
Because you guys came out with the famous bullshit token, right?
Yep, exactly. The 3x long shitcoin index token.
Which is that still available? That's still out there, right?
Yep, it's still out there. It's
probably outperformed last week then.
Oh yeah, it's had a pretty good week. So along with that, we did build leverage tokens in general, which I think are sort of a really cool way to tokenize leveraged positions so that you can trade them like spot contracts. You can move them around the blockchain. You can sort of get them listed on other venues, and obviously, Binance has listed a bunch of them recently, which we're super excited about, and seeing a lot of trading activity there. We launched move contracts, which they're basically straddles is what they are in sort of options lingo, but they're sort of contracts that expire to the amount Bitcoin moves. And so they're like pure volatility contracts, like abstracting away the entire directional move component. So we launched those, we sort of kept adding more and more, and there just seemed like a huge opportunity for cool and useful products to launch that people weren't really capitalizing on.
Yeah, the two new products, one I'll get to later, it's about the election, but which is something I'm personally really have been following. But the bigger one is actually your options. Yep. I think that one's actually pretty innovative. It's kind of like name your price. Can you tell a little bit about that product?
Yeah.
Because I think it's actually pretty easy and simple to use.
Yeah, absolutely. And so what it is, it's an options portal. You can, buy and sell calls and puts on margin. And sort of the cool thing about it is that one struggle with options is that there's a lot of them. Anyone who's ever tried to trade options on most exchanges, it's a bit intimidating. There's like 200 markets. They're all sort of very slightly different from each other, and most of them are pretty illiquid. And just generally, it's not easy to manage a space where there's a ton of different parameters and products. And so what we did instead was we basically have a portal where you can request quotes on whatever option you want. And so the way that works is you just type in whatever strike price you want, whatever expiration you want, whether you want a call or a put, click a button, and then anyone on the platform can kind of show you the best offer or bid that they have for that. And you can trade against that if you want. So it lets you just kind of custom build whatever options portfolio you want in a super straightforward way, and removes a lot of the clutter.
Mm-hmm. One of the unique things that I had in terms of using it is that I'm not an advanced trader, right? It's that I can pretty much get quotes on things that I want to build a position, right? Like how does that work on the back end? Like
exactly.
Who's my counterparty? I think that's my question. In the other markets is basically the market is the counterparty, right? But in this case, am I counterpartying against another individual, another institution, or are you guys backing it, or how does that work?
Right.
I think that's my biggest question.
Yep. No, it's a good question. And in some sense, the answer is similar to other venues. Sort of who you're facing is the exchange. The exchange manages all the margin for both sides and manages liquidation and things like that. And so from a risk exposure, the exchange manages all of that. But from a, who's taking on the opposite position, anyone who wants to can quote to you. So there's a way both on the GUI and the API to quote to everyone who's kind of requesting quotes on options. In practice, it's generally going to be liquidity providers. It's generally going to be sort of firms that are used to quoting options and sort of have API connections and just automatically compete to show quotes on every option that people ask for, and people just get filled against whoever's showing the tightest quote. So it could be anyone. It could be anyone with an FTX account, but generally it's going to be options liquidity providers who have an API set up and are automatically quoting.
Awesome. Can you tell a little bit about your presidential futures contracts?
Yeah.
What are your ideas? Because I've seen you tweeting a couple of times, and then actually CZ actually tweeting is that these are actually probably the best predictive engines because people are actually putting real money into them.
Yeah. Right. We launched prediction contracts on the 2020 presidential election. So we have contracts on Trump winning and then on sort of the 5 remaining, significant Democratic candidates. And basically what there is the Trump contract, it's a future that expires to 1 if Trump wins and 0 if he doesn't. Mm-hmm. And so, right now it's trading at about 64 cents, which means sort of the market's implying a 64% chance he wins. And, if you thought that was too low, you could buy them. And if you thought that was too high, you could short sell that. And then, we also have contracts on Bernie, Biden, Bloomberg, Buttigieg, and Warren winning the presidency. And, basically what we decided was that FTX is actually a really good venue to be hosting this for a number of reasons. Mm-hmm. We already had a matching engine. It's easy for us to launch markets. Crypto is a great way to collateralize and settle these. Anyone who's tried to use poker sites or prediction markets has probably run into all the difficulties with getting money in and out. Mm-hmm. And crypto exchanges make a really natural venue for that. You can do it with wire transfers or with credit cards. You can also do it though with stable coins or with Bitcoin or a bunch of other cryptocurrencies. And so it's a really easy to use venue for it. We already had the matching engine, and we have liquidity buyers, we have customers, and so we launched the contracts. So far, we're super excited with the reception to it. They've been trading something like $1 million or $2 a day, which is not super high by like Bitcoin futures standards, but actually makes it probably the highest volume presidential prediction market in the world. Mm-hmm. And one sort of cool fact is that the day we launched these, we set our record for daily active users by about 50%. And so we've seen, a huge uptick in customer signups and usage since these because if you think about what are the things people want to be trading, I mean, obviously crypto is one of them, but pretty high up on that list is the 2020 presidential election. There sort of weren't very many easy ways to do it. At this point, it's probably the most liquid, highest volume market for it. So we've seen a ton of excitement from a really wide range of users. And, sort of another exciting piece of this is that it lets us start inching into other user bases, mm-hmm. reaching out to people who are not currently cryptocurrency traders, but instead are trading other things, are trading presidential markets or sports betting or other mm-hmm. things, and sort of introduce them to FTX.
That's actually what I was going to get to is like sports.
Yep. I mean, it's, so for what it's worth, we sort of ran some polls about, what would people be most excited to see contracts on. And somewhat interestingly, actually the same thing won the poll, both in English and in Chinese. Often when we run polls, we'll get actually pretty different answers depending on what language we run them in based mm-hmm. on demands from different countries. But one thing that I can say is that there seemed to be a ton of demand for NBA finals contracts.
Interesting. This is like a rapid conversation. So we're actually moving things pretty fast. The last bit is actually to talk about what you see for the general crypto markets, right? I don't think I did a good enough job in terms of introducing Alameda. I think Alameda is actually one of the biggest quant funds, I think, in the crypto universe. They are probably the biggest liquidity providers in terms of for basically, the top 5, both on the derivative side and on sort of the spot exchanges. I'm sure you guys make money on the way up and on the way down. It seems like the momentum's been building into 2020 for cryptos to be a pretty big year on the way up. So do you have any thoughts on market trends? I know you don't like to make predictions, but any ideas in terms of trends for both, I think, the dominant, like the Bitcoin or maybe even alts?
It's interesting. And I think obviously this isn't financial advice. And this is sort of, I don't know what's going to happen. I'm just sort of mm-hmm. giving the best guesses I can. It's felt pretty weird. I think you look at like the 2017 run up. I mean, it was crazy, but it wasn't hard to see why things were running up. Like you walk down the street, you run into someone and they're probably about to try buying the Bitcoin for the first time. There's just absolutely massive global interest in it. You saw this in China, you saw this in Korea, in Japan, in the United States, in Southeast Asia. It's just all over the place. And you saw sort of huge numbers of new user bases. You saw, months-long backlogs on customer support for exchanges as they frantically tried to deal with their massive user base growth. And you saw institutions starting to get their feet wet. It was just, there's so much momentum behind it from so many angles. And that looks pretty different from what you see this time. There's a ton of excitement within the crypto industry for what's going on right now, but it's not like you sort of see as much sort of pickup outside of it. We don't see sort of the mass inflows into the industry of people that you saw a few years ago. And sort of doesn't feel like that just giant groundswell of flows from the world that we saw last time. And instead it feels like sort of way more market structure-y, way more concentrated. Feels way more like, boy, some people are buying a lot. And there has been a ton of enthusiasm, but it's almost a tail wagging the dog sort of thing where like prices started running up and then people got excited about that fact. And, there's been some good fundamental news. There's been some bad fundamental news. It's, you sort of can take whatever stances you want, but it doesn't feel like, oh yeah, the whole world is now using crypto in sort of a way that's like discreetly different from before things were running up. And so, one thing I'll say is it just feels weird. It feels like a weird run up, and it feels, way more concentrated and insular than last time. Now, that doesn't mean it's not going to be sustained. I mean, to some extent, people buy a lot of crypto, goes up, and that is what it is. So that's not necessarily a prediction about what's going to happen, but it does just sort of feel pretty different from last time.
Yeah. One of the things is that like one comment that you made is actually really, really good and really important. And I think it's sort of it's probably similar things on my front. It's like people are not lining up at the door and around the block to get their first Bitcoin. The mass adoption, this is not it. Probably just speculators on the halving.
Yeah, it definitely feels like something like that. Like it definitely feels like some group, some large group of traders who are sort of internal to the crypto community have decided that this is going to be a great year, that the halving is going to be great, and they're buying a ton on that. Is more what it feels like. Which again doesn't necessarily mean it's going to revert. Like I don't know that it will, but it definitely feels very different.
Any other thoughts? You guys make months look like years, but any thoughts or any comments you want to say about sort of what's upcoming for either Alameda or FTX?
Yeah, so we've got a bunch of things in the works. Some of this is going to be pretty straightforward stuff, but I think the coolest thing, and there will be sort of more details about this forthcoming, but we've got sort of a pretty cool series of rollouts related to basically tokenizing trading. And you could think of leverage tokens as sort of one step in that direction, but there's a lot more that you can do. And there's sort of a pretty powerful set of things if you put them together in the right way that can sort of unlock both designing trading, sharing trading, tokenizing, and a ton of other things rolled into one. And, I think we're hoping that sometime this month, we're going to be releasing sort of phase one of that, or at least sort of the first step of phase one of that, and then sort of more rolling out. But we think that's going to be sort of a really cool thing. We've got a bunch of other cool stuff as well, which hopefully will be going public over the next month or so.
Okay, awesome. Thank you very much, Sam. Thank you for all the good what you're doing to sort of, bring more adoption to the industry. Appreciate your time.
Of course. Thank you as always.
Thank you for listening. I hope you enjoyed this interview as much as I did. If you like this show, please share this episode on Twitter, Facebook, Telegram, WeChat, or any other social media platforms. Please don't forget to subscribe to the Binance podcast, and see you next time.